Hello, hello. Welcome to February 23. Alpha's lead with RCL at 182%. There it is, 182% for RCL. Like I, like I said before in the last few days, when I see this thing growing up, I was like, where are they making any kind of value with all their ships more or less docked around the world? Or maybe not. Maybe there are some sailings and I don't know about it, but you know what? I'm a technical trader and that's what you're here for. And we're here for 182%. So we went to last bar low. Well, we have a hammer here on a high price cycle. Sometimes this indicates a reversal. In fact, let me pull up my chart from Mr. Dunn. Yep, a hanging man, a candlestick pattern with a long wick below and the candle's body and little to no wick above the candle's body. The length of the body is usually 1/3 of the length of the lower wick. And that is a hangman. That's not even that's called a hammer. Hammers on the now we have a hammer on the bull side. Ah, it's green. So therefore it says here on the bull side hammer indicated the shape of the hanging man, but the difference is while the hammer occurs in a downward trend, the hangman pattern occurs in the uptrend. Well, guys, you know what? There might be more money to this baby yet. That'll be kind of cool. So there's today's lesson. When you have a green hammer, it's called a hangman. And the result is that it's an uptrend because it's green. If it was red, it would be indicating a downtrend. So we might have some more movement out of this. It'd be kind of cool to be able to get at least 50% back on this ode and drop it down under $1,000 when the time comes that it does exit. And it will exit. We know that. Everything will have an exit day along the way. All right, that's it for RCL, the miracle on the ocean, in my opinion. And now we'll go on now to American Express. So here we are at American Express, and American Express is 148. That is so cool. 148% for American Express. Now this is a doji. We did go to last bar low on here. Again, we're over 100 ROI. Look at where the low is here. Do we want to give up all this profit? No, let's do some common sense here. So the point comes down, and I even talked to Darren about this. Darren Kimoto, my headmaster at OTA. And remember, his opinion was divided between lower low or last bar low, but he was of the strong opinion that ROI over 100, you should be looking toward that last bar low for the reasons that I had presented before of the three advantages of last bar low. One, we take money off the table, which is profit. Profit then adds to the buying power. Two, we avoid time decay. And the time decay is that we can be in here for the trade, waiting for this pattern to show up, and it just might hobble along. So finally, the pattern shows up over here somewhere, or even down here, and we lose more money. And then the third thing was, the third and fourth, actually I covered both of them in the first statement, and that is take the money off the table and then increase your buying power. So, all right. So there we are with 148% for American Express. It's looking at 665 at the close here, and it owes 1879. Again, nice anticipation if we can get a little bit more push and clear out at least a 50% return on this trade session to take that out. I also want to point out something else here. We're in a lot of one contracts. Reason is that this is a small account. This is the laboratory account. Now, the O's that you do see here were not occurred while we had the small account. The O's were occurred during the time that when this account was in high numbers. Yes, this was a high number account in previous times, and that's why these O's are so big, as you can see. So this is a real battle of David versus Goliath. David being the smaller account, and Goliath, these big, huge O's. But you can see that in time we can chip away at that rock, and rock becomes pebbles, pebbles become profit. So the point is that at 665 here at the top of this, at the close of this doji, we can get a little bit, get some significant push, get out at around $700. We can drop this down under $1,200 on the ode, and the next time we go back out. But the point I'm pointing out that if had this account been back to its original numbers, adding one more zero, this would have been 10 contracts. Now imagine 765 would actually be what? 7,665. It would be 6,655. Now, there are traders who do trade. Another lesson for today, and that is this lesson, that there are traders who trade off contract numbers. Yeah, my daughter's one of them. She has a nice account, but she will only do one contract until she feels confident that she has her trading strategy under control and in the best opportune situation. And then when the account grows, then she'll work herself up to 2 contract base and then 3 contract base. And you can see where I'm going with this. So it becomes an inherent risk management. And that's what's important here. It's risk management. You got to control how much money you're going to put up for the loss to get into the gain. And right here was a good example. We risked 1 to get 1 unit. And look at this. We crossed the 3rd ratio. We closed the 4th to 5th ratio. And did we close? We closed the 6th ratio. Look at that. 137.54, and the close was 136.94. So we're a little bit shy. A little shy of the 6th ratio. All right. So that's good news on American Express. Let's go on to Bank of America. Now, Bank of America is just 1 percentage point off its 100 ROI exit. But here's what happened here also is we did finally cross that close above the 3rd ratio, which has now initiated the lower high, higher low, lower low, higher low pattern setup. And that's what we're now waiting for in Bank of America. And the Bank of America is at 438 with an ode of 221.87. All right. That takes us now to Berkshire Hathaway, Mr. Buffett. And there is Mr. Buffett, and it closed above. Now look at this. This closed, there's the 3rd ratio, and it closed above the 5th and the 6th ratio right there. And we did have a close move up here, lower low, higher low, lower low. Remember, we're under 100 ROI. So the 100 ROI rule only triggers when the 100 ROI happens. Now, once the 100 ROI has triggered, that rule goes into play, and exits do not retreat. So once you achieve 100 ROI, even if it falls back to 75, but you're still in the game, your exit will not retreat. Okay, that takes us to TJ Maxx at 28%. 28% for TJ Maxx. And let's see what we got. So here we are at TJ Maxx. And we are just shy of closing above our 3rd ratio. And we only have 28% to our good, so there'll be no change there. Again, those are the advantages of the 3-to-1 ratio system, is that you don't have to keep moving the stop all the time until you get into a profit possibility zone. Once you get into the 3rd ratio zone or your ROI 100, then you can look at those daily exits. Capri is our last holder for the positive side. 1-to-1 ratio is starting to creep up a little bit on its own, and possibility could be some accumulation because we see went up and then it staggers through here. Something is happening. So let's keep keeping an eye on this and see how this is going to roll. And that is the conclusion of today's report. Nothing on the binary options. Why? Because I haven't finished my studies yet, and I'm not going to make reports on stuff until we have success. That's what we call the bottom line. So losers become winners. Alpha RCL 182% for today. And I thank you very much for stopping by and checking it out.